Starbucks announced their preliminary fiscal Q4 and full year 2024 results. Not everything was released yesterday, but we got some key numbers for the quarter in particular, and they were not good at all. The stock dropped like a rock really late in trading and then after hours, actually recovering pretty nicely today. So I'm gonna go through how investors should be looking at this. This is one of those times where a new CEO comes in. Brian Niccol is now the CEO. You kind of flush everything out, everything bad that can possibly happen. You try to get out of the way right now. That's part of what we're seeing. It's also not quite the full picture of what's going on. You also want to give investors a little bit of a carrot. They did that by raising the dividend. So I want to go through all this today and try to put it into a little bit of context on where Starbucks is going from here. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get to the investor relations page, because I think it's always important to look at how companies are trying to frame something that's going on. This is bad news, but what are we going to do? We're going to first announce there's an increase in the quarterly cash dividend. That is this release right here. Increase that dividend from 57 cents per share to 61 cents per share. And that's going to be related to the dividend that's payable later this year, November 29th, 2024. So you introduce a little bit of good news along with the bad news. What's the bad news? This report right here, preliminary Q4 and full year 2024 results. The big number that you want to look at is global comparable store sales declined by 7%. So same store sales is going to be what you want to watch with any sort of retail company, restaurant, and you want those numbers to be going up because there's a lot of fixed costs that goes into something like building a Starbucks. You have to pay rent, you have to have staff there, and then you want to increase the amount of sales that are going through each one of those fixed cost locations. If you're increasing sales, you're going to have operating leverage. Your net income or free cash flow is going to increase faster than your revenue. The opposite is going to happen if revenue is going down. That's why this is such a big deal. Total revenue declined 3% to $9.1 billion. But then they did say that earnings are going to be 80 cents per share. So still profitable, but just for some context, analysts are expecting about 88 cents per share in earnings for this quarter. So this is going to be disappointing from an earnings perspective. But like I said, management wants to get all this bad news out of the way now. The other thing that would normally be really bad news off the bat would be pulling full year guidance. But they said that given the CEO transition coupled with the current state of the business, guidance will be suspended for the full fiscal year of 2025. This will allow ample opportunity to complete an assessment of the business and solidify key strategies while stabilizing and positioning the business for long-term growth. Brian Niccol, who is that new CEO, said that our fourth quarter performance makes it clear that we need to fundamentally change our strategy so we can get back to growth, and that's exactly what we're doing with our Back to Starbucks plan. Goes on to say that he's talking to baristas, trying to get a feel for what the business looks like on the ground. Certainly something that they should be doing as a CEO, but it doesn't fundamentally answer whether or not this is going to potentially become a growth company again, or whether we're going to go into a phase where Starbucks is maybe going to be closing a lot of its stores and kind of reducing its global footprint. And I say that in part because if you look up here, China's comparable store sales declined 14%, driven by an 8% decline in average ticket. So people are spending less, and a 6% decline in transactions. So people are coming in less. Double whammy for Starbucks. And this is one of those big things where is an area like China just going to become untenable for a company like Starbucks, a US brand and a country that is really focusing on itself now rather than importing products from the West? These are existential questions that a lot of companies are facing. Starbucks is obviously one of them right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. I think the real question that Starbucks has to answer right now is, what does the future of the company look like? That's obviously why Brian Niccol was brought in as CEO, but there's no easy answer. The world that we live in 2024, the way that people work, the way that people travel to work, their coffee habits, what's available on a local basis, very different than it was in 2019 going into the pandemic. And I think that's where numbers like this is the comparable transactions in blue and the average ticket growth is in green. And you can see that for years, and this is consistent with Starbucks history, they were able to take a little bit more price. They were increasing the number of transactions. Obviously 2020 was bad for the company, but 2021 really picked up again, and they were increasing their ticket 10% both in 2020 and 2021, 5% the next year, 5% the year after. So they're taking price again and again and again. You now get to a point where people aren't going to the office as much. When they do, are they driving by a Starbucks? And do they reconsider, man, maybe I don't want to spend $6 on a latte. Maybe I can get that at home. Maybe it's available at the office. Maybe there are other drinks that are available. It's just a very different environment today than it has been for Starbucks. And the growth of the company has been not only those ticket prices and the number of transactions, but also the number of stores. You can grow the number of stores, which you can see here. This goes back to 2018, but you can see that the store count, especially internationally, growing at nearly a 10% compound annual growth rate. If we're seeing the numbers like we see in China, or even the overall numbers on a same store sales basis decline, that's telling you that one answer that Starbucks could have is just simply closing stores, pushing customers to other existing stores that are probably not very far away. But that is ultimately going to be bad for the bottom line, because you're just simply not going to have as much revenue coming into the business. Yes, each one of those individual stores is probably going to be more profitable than it would be otherwise, but you're going to have costs associated with closing stores, and the overall net income opportunity may not be as big as it was previously. So this is really the dance that Starbucks is playing right now, is what is the future of this company? Is it going to have momentum behind it in the future? Have we already seen the peak for Starbucks? Is the world changing to have different drink habits, different eating habits? I think we've seen that a lot, and companies like Chipotle were one of the beneficiaries. That's where Brian Niccol came from. Can he bring some of that magic to Starbucks? That's yet to be determined, but that's a lot of what investors are betting on. I want to just end this with some of the multiples that Starbucks is trading for. So this is based on trailing 12-month numbers, not including this fiscal fourth quarter. Price to earnings multiple is 27. Enterprise value to sales multiple is 3.6. To put that into a little bit of perspective, when Niccol took charge of Chipotle, Chipotle was trading for 2 times sales. Today, that's closer to 7 or 8 times sales. So one of the big beneficiaries that he had as CEO of Chipotle was just simply multiple expansion. Is there ability to generate multiple expansion from a company that already has a relatively high multiple on a price to sales basis and on a price to earnings basis? That multiple is just going to get worse as these numbers actually flow through the system and the company becomes less profitable. Remember, they said earnings per share are going to be down 25% this quarter. So that price to earnings multiple is going to go over 30 pretty quickly. So again, from an investment perspective, I think Starbucks has a lot to answer. And two things can be true with Starbucks. The company can be at a low point right now. There may be a little bit of a recovery coming for the business, and it can still be an expensive stock. So I think there's a tension there for investors. Not a company that I'm buying right now. I just don't think that the future days for Starbucks are going to be brighter than the past, where those days of growing the number of stores, increasing ticket prices, I think those are kind of behind this. This is not really the same cultural touch point as it was 10, 15, 20 years ago. And that's ultimately what you're buying and what you're paying a premium for with the Starbucks brand. But let me know what you think about the recent preliminary results, what you're expecting from Brian Niccol going forward. Leave those comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.